Chapter 1. Confessions of an Addict. Imagine an economy functioning like a massive, unstoppable flywheel, its every rotation greased by billions of tons of concrete and an endless stream of easy credit. For 3 decades, we watched China pull off an economic miracle that seemed to defy the very laws of financial gravity. From the mudflats of Shenzhen to the neon-soaked skyline of Shanghai, megacities rose with a speed that made the American Rust Belt look like a relic of a forgotten era. It was a spectacle that both fascinated and terrified the West. But behind the shimmering LED facades and the silent hum of high-speed maglev trains, Beijing knew a dark truth that they kept hidden from the global stage. This entire miracle was fueled by a dangerous systemic addiction to debt. In the United States, we view a home as a place to live, or perhaps a steady long-term investment. In China, real estate became the country's lifeblood, accounting for a staggering 25 to 30% of its entire GDP. To give you some perspective, that is double the impact the housing sector had on the U.S. economy before the 2008 crash. For local Chinese governments, selling land was the only way to keep the lights on and the subways running. For the average family, a home wasn't just an asset, it was their everything, holding over 70% of their total net worth. But as the flywheel spun faster and faster, the friction began to burn. Ghost cities emerged, sprawling forests of luxury high-rises where the only residents were the wind and the dust. And the debt piles grew so high that even the world's largest developers couldn't see the top. The question for the global markets wasn't if the bubble would burst, but who would be the one to finally pop it. In 2020, while the rest of the world was distracted by a global pandemic and printing trillions of dollars to stay afloat, Beijing did the unthinkable. They didn't reach for a bailout package, they reached for a needle. They proactively pulled the plug on their own housing market. This wasn't a tragic accident or a failure of oversight. It was a calculated, cold-blooded execution of the old economic model. Why would a superpower willingly gamble the stability of an entire generation? Because they realized that in the 21st century wars aren't won with apartment blocks and shopping malls. They are won with silicon and code. Concrete had to die so that technology could live. Chapter 2. The 3 Red Lines. A survivalist execution. In August 2020, while Washington was preoccupied with stimulus checks, the technocrats in Beijing were drafting a death warrant. They called it the 3 Red Lines policy. On the surface, it looked like standard regulatory housekeeping. But in reality, it was a financial guillotine. Beijing didn't just slow down the housing market, they essentially cut off the oxygen to an industry that had been breathing on a ventilator of debt for 20 years. To understand why they did this, you have to look at the demographic enemy lurking in the background. Beijing realized that a real estate-driven economy requires a growing population to buy more homes and take on more debt. But China is facing the fastest demographic collapse in human history. By 2024, the working-age population was shrinking by millions, and the birth rate had fallen to levels that made Japan's lost decades look like a boom period. With 400 million seniors projected by 2040, Beijing asked a chilling question. Who is going to live in these empty towers? This realization turned the housing bubble from an economic engine into a ticking time bomb. High housing prices were the primary contraceptive keeping young people from starting families. By popping the bubble with the 3 red lines, Beijing was performing an exorcism. They weren't just killing a market. They were trying to lower the cost of living to save the birth rate, while simultaneously forcing capital out of useless concrete and into the only thing that can save a shrinking nation, automation and robotics. For an American audience, think of this as the anti-2008. When the U.S. housing bubble showed cracks, we saved the banks. China did the exact opposite. They looked at their biggest developer, Evergrande, and they let it bleed. They watched as the world's most indebted company spiraled toward default. It was a clear signal. The era of growth through people and property was over. The race was now on to become the world's first automated superpower before they simply ran out of people. Chapter 3. The Cost of Sacrifice. A nation in retrenchment. When a bubble this massive pops, it doesn't just hurt the billionaires, it eviscerates the middle class. To understand the sheer scale of the pain in China today, you have to look at the numbers. In the U.S., we diversify. We have 401(k)s stocks and various investments. But according to Bloomberg Economics, real estate accounts for a staggering 70% of total household wealth in China. Compare that to less than 30% in the United States. For the average Chinese family, their home wasn't just a roof. It was their retirement, their children's education, and their entire net worth. Now imagine that safety net catching fire. Data from the Bike Research Institute reveals that prices for existing homes in Tier 1 megacities like Beijing and Shanghai have plummeted by 15% to 25% from their 2021 peaks. In smaller Tier 3 and Tier 4 cities, the collapse is even more brutal, with values cratering by as much as 40%. This isn't just a market correction, it is the wholesale evaporation of a generation's life savings. The psychological fallout has triggered what economists call a reverse wealth effect. As people feel poorer, they stop spending. The People's Bank of China, PBOC, reports that household savings have surged to record highs as citizens hoard cash in terror. This has dragged China into a dangerous deflationary spiral, with the Consumer Price Index (CPI) hovering near zero or even turning negative throughout 2024 and 2025. But the most haunting statistic is the debt. According to the Chinese Academy of Social Sciences, cash household debt as a percentage of GDP has skyrocketed from less than 20% in 2008 to roughly 64% in 2024, almost entirely driven by mortgages for homes that are now worth less than the loans taken out to buy them. For the youth, the future looks even bleaker. Youth unemployment for those aged 16 to 24 surged past 21% in 2023, forcing the government to adjust their statistics to hide the reality. This has birthed the Tangping, or lying flat movement, a silent strike by a generation that refuses to run a race they know is rigged. Beijing is gambling that this widespread misery is a price worth paying. But for 1.4 billion people, the great sacrifice feels less like a strategic pivot and more like a betrayal of the Chinese dream. Chapter 4. The New Quality Gamble from Concrete to Chips. If you walked into a high-level briefing in Beijing today, you wouldn't hear about floor space or zoning laws. Instead, you would hear a new mantra: new quality productive forces. This is the core of China's grand pivot. Beijing has looked at the billions of dollars that used to flow into speculative apartment towers and redirected that fire hose of capital toward three specific sectors: electric vehicles (EVs), lithium-ion batteries, and green energy, known in China as the New Three. For the American observer, this is where the story gets competitive. While the U.S. has focused on software and Silicon Valley, China is doubling down on hard tech, the physical machinery of the future. In 2024 and 2025, investment in high-tech manufacturing in China surged by nearly 10% year over year, even as real estate investment plummeted by over 20%. Beijing is making a calculated bet. They believe one semiconductor plant or one automated EV factory is worth more to national security and future GDP than an entire city of empty condos. This isn't just about economic growth, it's about survival in a fractured world. By dominating the global supply chain for solar panels, where they hold over 80% market share, and EVs, China aims to make the rest of the world, including the West, dependent on them for the green transition. They are trading the internal debt of the housing market for external leverage over the global economy. However, the math is risky. Real estate was a blunt instrument that created jobs for millions of unskilled workers. High-tech manufacturing is different. It's automated, precise, and requires a highly educated workforce. Beijing is betting that they can replace a $30 trillion housing market with a high-tech sector that, while highly efficient, currently only accounts for about 15% of their GDP. It is a race against time. Can the New Three grow fast enough to catch the falling knife of the Chinese economy before it hits the floor? Chapter 5. Exporting Deflation. The Global Trade War 2.0. As the domestic housing market crumbled, Beijing made a ruthless realization. If 1.4 billion Chinese citizens aren't wealthy enough to buy the products coming out of their new high-tech factories, someone else has to. This has birthed a phenomenon that keeps Washington and Brussels up at night, the export of deflation. To keep their economy from flatlining, China is flooding the global market with an oversupply of cheap, high-quality goods, effectively forcing the rest of the world to pay for their structural transition. For the American consumer, this initially looks like a win: cheaper EVs, 600 solar systems, and affordable tech. But for the American worker, it's a repeat of the China shock of the early 2000s. Only this time, it's targeting high-end industries. By subsidizing their new three sectors with the capital once destined for real estate, China is driving prices so low that Western competitors cannot survive without government intervention. We are no longer talking about cheap toys and textiles. We are talking about the strategic core of the future global economy. The reaction from the West has been a wall of protectionism. In 2024 and 2025, we saw the U.S. and the EU impose record-breaking tariffs on Chinese EVs and green tech, some reaching over 100%. Washington views this not just as trade friction, but as an act of economic warfare. China's great sacrifice at home has triggered a massive trade offensive abroad. By killing their property bubble, Beijing has effectively chosen to survive by competing for your jobs and your market share. The collapse of an apartment block in Evergrande's portfolio isn't just a local tragedy, it is the starting gun for a global race to the bottom that could reshape the geopolitical map for the next 50 years. Chapter 6: Genius Pivot or Fatal Blunder. We have reached the ultimate crossroads of the Chinese story. Depending on which economist you ask, Beijing is either performing the most brilliant economic pivot in history or committing slow-motion national suicide. This is the debate that will define the 21st century. On one side, the genius pivot camp argues that China is simply doing what the West was too afraid to do, amputating a gangrenous limb to save the body. By 2020, the housing market had become a black hole for capital. Every dollar spent on a vacant apartment was a dollar stolen from the next semiconductor breakthrough. These analysts point out that while the U.S. remains addicted to consumer debt and stock market bubbles, China is the only superpower actively building a fortress economy, one rooted in tangible high-tech manufacturing that is immune to Western sanctions. To them, the current pain is just the price of admission to a future where China is the world's sole technological hegemon. On the other side, the fatal blunder camp sees a disaster in the making. They argue that Beijing has fundamentally misunderstood the math of their own country. Real estate wasn't just an industry. It was the primary source of wealth for 1.4 billion people and the primary source of revenue for every local government in the country. By killing it, Beijing has triggered a balance sheet recession that could last for decades. They point to the GDP gap, the fact that high-tech sectors, while flashy, only contribute about 15% to GDP, whereas the property sector contributed 30%. You cannot fill a hole that big with solar panels and electric cars alone. In this view, China hasn't just popped a bubble. They've broken the social contract that kept the country stable. The reality: we are currently in the gray zone. China is gambling that their technological leap will be so massive, so transformative, that it will create a new kind of prosperity before the old system completely disintegrates. They are betting that AI robotics and the green transition will solve their labor shortages and their debt problems all at once. It is a high-stakes poker game where the chips are the lives of 1 billion people. If they are right, the 21st century belongs to Beijing. If they are wrong, they have just set their own house on fire to keep the lights on in the laboratory. Chapter 7: The Verdict. An automated superpower or a museum of debt. We have reached the end of the great sacrifice. What we are witnessing today is not just a market correction. It is a fundamental re-engineering of the Chinese state. Beijing has chosen to burn down the house of real estate, to use the heat to power a laboratory of chips and robots. It is a gamble of such immense proportions that it makes the 2008 financial crisis look like a minor accounting error. The question isn't just about China's survival, It's about what kind of world we are entering. If Beijing succeeds, they will emerge as a fortress economy, an automated high-tech superpower that doesn't need a growing population or a housing bubble to exert its will on the world. They will have traded the fragility of debt for the leverage of technology. But if they fail, the world faces a deflationary black hole, a stagnant, aging giant that could drag the global economy down with it for decades to come. The lesson for the West is stark. While we continue to debate housing affordability and interest rates, China has decided that the old world is already dead. They have realized that in the 2030s and 2040s, national power will not be measured by how many people you have or how much their homes are worth, but by how many silicon workers you can deploy. Beijing has performed a cold-blooded execution of its own past to buy a ticket to that future. Whether this was a stroke of genius or a fatal blunder remains the ultimate mystery of our time. But one thing is certain, China is no longer playing by the rules of the 20th century. As the dust settles on the empty towers of Evergrande, a new automated rival is rising from the rubble. The only question left is the rest of the world ready to compete with a nation that was willing to sacrifice everything to win?